I am heading to an appointment right now, and I thought about sharing with you guys what are some really key factors that are impacting prices here in Miami real estate. And frankly, this is really applicable anywhere. We see a lot of our clients trying to figure out what's going on, what should they do, should they buy, should they sell, should they hold? And the reality is, and a lot of them look at one factor or two factors in determining what they believe will happen next. And certainly there's certain factors that are more impactful than others, but there's a huge variety of factors that impacts a market like Miami. Remember, real estate is local, so it's not always about looking at just macro and that's it. You got to look at micro, you got to look at local as well. And with all those combined, you can make your own judgment. So I want to talk about around 10 factors, I don't know if that's actually 10, that help determine what happens with prices. Okay, so the first one is businesses moving, right? Jobs. Miami is one of the cities where it has recently started attracting a lot of big figures in tech, in the financial world. The billionaire, Ken Griffin, I can't remember his name, from Chicago. He's moving his whole operation here. He's actually building a super tall to house not only his people, but just as a showing that he's all in on Miami. And there's actually articles, if you write Ken Griffin all in on Miami, you'll see what I'm talking about. So businesses are moving here and they're bringing people with money, right? They're bringing jobs. They're bringing people who have jobs. They're creating jobs here. And that's always really good for the local economy and for the local real estate market, right? So that's one. Interest rates. Interest rates is another one. As we all know, interest rates went up from 2-3%, just a year or so ago, to now we're up to close to 7% in the high sixes. And certainly higher interest rates means that properties are less affordable to buy. When they're less affordable to buy, there's going to be less demand for them. What people can afford will change, because basically real estate is really based off of what your monthly expense is going to be once you factor in your mortgages and so on. That's a big factor in how real estate works. And so that certainly is going to make a big impact, and it's not necessarily a positive one. It's not a positive one. And certainly folks who have mortgages will be less inclined, who need mortgages will be less inclined to purchase, or won't be able to purchase as much. Their buying power becomes limited, right? Let's also keep in mind at the same time that Miami is also a special place that, for example, in the condo market, I think something around 60% or so, the luxury condo market, 60% or more of deals happen in cash. When deals happen in cash, the result is that they're less impacted, of course, by interest rates rising. Work from home policies. Let's talk about work from home policies for a second. Companies are solidifying their work from home policies. Some are determining that that's the way they want to be. They want to be remote only companies, and that will greatly benefit Miami. That's the reason why a lot of people moved here during the pandemic. That's a lot of reason people, because people want to live in a city like Miami, right? Great weather, low taxes, all that kind of stuff. But if their job was elsewhere, they wouldn't be able to do that. But now they can get a high-paying job from a company out of Seattle or San Francisco or any other major city, but they can live in amazing weather year-round, and no income taxes. However, there's also a flip side to that, which is there are some companies that are clawing their companies back, saying, listen, you need to come 2 days a week, 3 days a week, and so on. And that will impact us negatively, because some people will have to move back. Now, those people who move back, if they got 2%, 3% interest rates, and because of how rents have gone up, they're not necessarily going to sell. They're going to rent. Some of them may sell, of course, but many of them are just going to rent out their units because it turns out that it can be a moneymaker for them. And so that's still, while there might be some extra supply because of people moving back and selling, it's going to be more limited than you would imagine, because many of those folks may just hold on to it as second homes and or rental properties. What else? Let's talk about supply. Supply impacts prices, right? If you have a certain amount of demand and supply is low, it increases the prices. And if you have a lot of supply and not enough demand, that typically puts price pressure and it decreases prices. So supply is not a leading indicator, it's a trailing indicator, because it's something that's, well, it's an indicator that other things cause supply to increase and decrease, right? And what's really impacting the ability for us to have more supply of properties so that buyers can have more choice and more power in the market, so we can turn it from a seller's market to a buyer's market, and potentially have prices come down a little bit. The issue is that all those people over the past few years that got 2%, 3%, 4% mortgages are very uninterested in selling their properties unless they absolutely have to. Why would someone sell their property when they're at a 2.5% or 3% mortgage to then go buy something else somewhere else at a 6 or 7% mortgage? It really is a disincentive for people to list their properties on the market. So what happens is people will hold on. They'll hold on as long as they can. Do they really need to move? Do they, is it a necessity? Okay, some people, of course, will need to move, so they don't wait. They go ahead and pull the trigger. But it's certainly something that's a disincentive for people to want to make that move. You also have insurance rates. Insurance rates impact prices. Right now, because of Hurricane Ian, already just insurance rates have been going up lately. Certainly, Hurricane Ian has solidified that, even though South Florida, where we are, didn't get any impact at all from Hurricane Ian, or basically nothing that I know of in terms of damage. What happens is the Florida insurance market will be impacted, and so insurance rates are certainly a pressure point for prices. They've been going up for years and years and years, and yet prices here still steadily climb, and in a very healthy way, and people continue to come here. So certainly it is a factor, but it hasn't made a massive impact historically, so we have to see how it plays out ongoing. Taxes are also a big factor, always a big factor of how people make their decisions. One of the reasons Florida has been such an attractive place for people to move is because there's no state income taxes here. That hasn't changed, and that's still a driving force in people continuing to move to South Florida, and that's a big demand factor of having so many buyers move here, especially as other big cities have really not done anything to mitigate the tax burden from their constituents in other big cities in the U.S. In fact, many big cities, I think, are still tending to lean towards raising taxes, not reducing them. Let's talk about weather. Weather hasn't changed. Yes, you have Ian, you have an occasional hurricane. That's part of living in paradise. You can't have everything be perfect. But ultimately, there's 300 days of sun, 350 days that you can be in shorts and a t-shirt. It's a wonderful place to be, and that continues to drive people to come to Miami. Turmoil overseas. This is a key one. Boise, Idaho right now, prices are coming down. The question I ask you is, let's talk about some of these factors. Think about all these factors, like, for example, business coming to Boise. I don't know. Are a lot of businesses moving to Boise? Maybe. I don't know. But let's talk about turmoil overseas. Colombia just elected a leftist president. Brazil is in a tight race where they might end up bringing in a leftist president who actually went to jail and got out and now is running for president and actually could win. It's a crazy world we live in. And there's other countries that go through political turmoil, Russia, Ukraine. There's political turmoil everywhere, and the U.S. is traditionally always a flight to safety when there's any political or financial or social turmoil in any of these other countries, any countries, period. The dollar is safe, the American legal system is safe, people can put their money here and know that someone's going to not come and just take it from them, or buy a property here and know that someone's not just going to come take it from them. And so people with money hedge their bets and buy into the US, and real estate is one of the most common investments they make. South Americans are especially comfortable, and they consider Miami, the Miami area, really their second home outside of their own country, a lot of them. And so it becomes a place that they bring their money. So that's a demand factor. When there's political turmoil overseas and social turmoil, financial turmoil, people bring their money in. And another funny thing is when economies are doing really great in other countries, people also bring their money here because they end up wanting to come and have their fancy second home and so on. So it kind of goes both ways, but usually when it's negative, it actually ends up being a positive in terms of real estate demand and investment for us here in South Florida. Let's talk about stock markets for a second. Stock markets is a funny thing because when stock markets go down, there's a certain number of people who take their money out or choose to put more money into real estate. When stock markets are going flat and nothing's happening, some people get bored, take their money out, put their money in real estate. When stock markets go up, sometimes people take some money out because they want to reallocate or because they feel like they want to catch the peak or whatever the case may be, take their money out and put it in real estate. I'm not saying everyone does this. My point is that stock markets going up, down, or sideways, everyone has their own story as to how they go about their investment allocations. But real estate is always on their mind. And so when you see stock markets go down, it doesn't necessarily equate to real estate demand significantly dropping. There obviously are always impacts. The wealth effect matters. When people feel wealthy, they spend more money. When they don't feel wealthy, they don't spend more money. So it could impact, for example, second home purchases or things like that. But investments still flow. People still make financial decisions, whether the stock market's up, down, or sideways. Crypto market's the same thing. Miami has attracted a lot of crypto millionaires, and it is trying to be like the crypto capital of the U.S. Certainly, crypto has gotten crushed this year. However, it sort of follows a similar concept as the stock market that I just said. I don't need to repeat it. Basically, when it goes up, they spend money. When it goes sideways, they get bored and take it out and spend money elsewhere, like real estate. And when it goes down, people get scared, leave the crypto market, and decide they need to put their money elsewhere. So, of course, the big one, which I kind of probably should have put at the beginning, but is inflation. Inflation certainly impacts everything, every decision everyone makes in the world. But if you go online and research what is a common hedge against inflation, and you will find that real estate will be on that list of inflation hedges. Real estate tends to track inflation to a certain extent. And so if you invest in real estate, it ends up being a hedge against inflation. Many assets end up being a hedge against inflation. If you keep your money in dollars and the value of money is going down, you get killed. If you take your dollars and put it into assets, your assets tend to typically rise with inflation. I hope that was helpful, guys. There's a lot of factors that go into what causes prices to go up and down. You can't just look at one thing or two things. You have to look at the big picture. Markets are very local. Not every factor that ends up being a positive for us will be a positive for another city or state, and not every factor that might be a negative for us will end up being a negative for other cities and states as well. It's complex. Think about it, come to your own decision, reach out to us. We'll be happy to guide you and help you find a great property in Miami if you're interested in buying, and sell your property if you're interested in selling. Have a great day.